right, it is Monday morning, which means Carl Delmont from Fremont Mortgage comes in with great advice and all sorts of information about the housing industry. But one thing that we definitely want to talk about is this Fannie Mae change, this deadline that's coming up. What exactly is it that they're doing, and what's it going to mean for people?
Well, I think people need to realize that June 1st, Fannie Mae has a new rule coming out where lenders have to pull a new credit report right before closing. And the idea behind it is they want to make sure that the guy who got pre-qualified for his home doesn't go out and just go buy a car or two or go out and make all these purchases. And it makes sense in that regard. However, there's going to be a lot of innocent people caught up in this, because imagine that you're getting ready to buy a house and right before, maybe 3 weeks before you go to closing, your kid's transmission goes up in his car. So you put in your credit card, and your credit card is a $5,000 limit. You have $1,000 on it. Now you put another $3,000 on it. Well, because now you're almost maxed out, your score could plummet 20 or 30 points. Does that mean you're any worse of a risk than you were prior to this? Just means you're doing everyday expenses. Or what about a young couple, same scenario, trying to buy a house, and as a lender, you're always told, don't spend that cash. We need to verify you have those funds to close. Well, all of a sudden, their transmission goes up or something unexpected, and then they put it on a credit card versus paying cash for it. Well, then all of a sudden their credit score could change. So there's just a lot of things going on there where I understand why they're trying to do it, but for the few people that take advantage of it, you're putting everyone in that same net. That's kind of scary.
Right. Isn't there a better way to do it?
There's not a better way to do it, but this is the
That's the way it's going to be.
Fannie. Well, look at Fannie and Freddie came and balanced their checkbook, so I'm not going to look to them for good advice.
I guess you just have to be careful where you go when you're thinking.
Just be prepared that, try to be really, really cautious before you purchase or refinance. Make sure you don't do anything expected. If you do, call your lender and tell them ahead of time so they can make preventive steps.
All right, financial reform.
Yeah, that's another one. Once again, we have this huge rush to get something. The word from Chris Dodd and Barney Frank, Senate and House, are both, we got to get it done by July 4th. I think it's more important to get it done right than to get it done right now. And There's just a lot of things in there where they're trying to take things away. One of them is they want to cap the income on loan officers. And a lot of people think, oh, well, that's a good thing, let's make too much money. But you got to look at the thing. If they cap an income, what's next? But more importantly, one of the things they want to do is limit the ability, when someone comes to buy a house, you can actually do a combination of the very lowest rate or very highest rate and pay all the closing costs. They're saying you have to do one or the other. The majority of the people do something in the middle, where they take a rate that's slightly higher than par and use that extra profit to maybe pay some closing costs or pay off a judgment or anything that make it work. Taking that away really is anti-consumer, but they think they're taking away the money. In this market, no one's even making the max amount of money that's allowed by law anyway. So it seems like they're chasing things that sound good from a political standpoint,
right?
But from a consumer standpoint, I don't know. I think it's not a good move. I think they need to go back and really talk to the industry and talk to consumer groups before they just rush through on this one.
All right, before we go, real quickly, lenders, new low road.
This is the new low rate. This is really, really scary. Over the weekend, we've had 2 different people contact us to see if we could review their paperwork. 2 different big banks are now sending letters out to clients saying, you know what, we're too busy. Sign this letter agreeing not to sue us because we can't guarantee we're going to fund your loan in time to get the tax credit. So, yeah, you made contract, but we can't guarantee. Even though you have your application in early May, we can't guarantee we'll close you. And they're telling people to do
scary.
This. If you're going to send a letter out, hire more people. You got 6 weeks to do this. What is it? It's bad. But this is why financial reform is being pushed through, because the banks continue to find new low roads and hurt consumers, and they think the answer is some of this other stuff. So it's a big tangled mess. But just watch yourself out there. There's a lot of pitfalls that could affect, especially with this tax deadline looming.
All right, Carl Delmont is with Fremont Mortgage. He comes in every Monday. If you have a question, just email us at morningshow@wmar.com.